What's up, YouTube? It's Joe Catchpolia sitting on the couch, making some money investing in fractional real estate online. Today, I'm going to look at another property. It's a pad split property, meaning midterm rent by the room style property. 7 bedrooms, 3 baths in Atlanta, Georgia. It's similar to a few other properties that I've looked at on the Mogul playlist. So I do have a playlist in my on my channel for Mogul specifically, and you can see me talk about a couple other properties very similar to this one. And so I'm not going to go over, the Atlanta, Georgia market again. I'm not going to go over the national, the FEMA or national risks map, because that's by county. Because it's I just don't want to rehash a lot of the same stuff. But if you haven't seen that, it's definitely something that you want to think about and look at. Again, just because I might buy some of this property doesn't mean that you should, right? You want to do your own due diligence on the platform and on all the properties on them. Before I forget, please like and subscribe. And in the description to this video, there is a link to Mogul and all the other sites that I'm investing in fractional real estate on. Some of them will give you free money if you use that link. Some of them won't. You want to read the terms and conditions again, do your own due diligence. And then there's also a link to our Discord, a whole bunch of us investors that are buying fractional real estate on several different platforms, or all just get together on this one Discord channel, talk about investing, talk about some of the different platforms and different strategies we're using and whatnot. So you're welcome to join that if you haven't already. But let's jump into this property. So it's one that has been, like I said, 7 bedrooms, 3 bathrooms. It's 2,300 square feet currently. If you watched the webinar that they did today, and I would encourage you, if you're going to invest on Mogul, to start watching their monthly webinars. They're very open about answering questions. One of the questions that they had, or that I had for them on this one is, why is there a discrepancy? This says 2,300 square feet. The county thinks it's 1,464 square feet. Those two things don't add up at all. When you look at the pictures, right, and you have these are kind of like the Matterport pictures. You can see, I don't know if that's actually what they used here, but it definitely doesn't look like 1,400 square feet to me. I don't think you squeeze 7 bedrooms into that. So I think that this number is accurate. I think I've been overall very complimentary of these guys. I'm starting to really trust their picks and whatnot, but I really didn't love the answer that he gave to, why is there that discrepancy? It basically just, well, there's a lot of times the MLS and the county and whatnot have, they don't have their numbers accurate. I'll just want to talk a little bit about why that is a slightly worrisome answer to me, and why I think it might create some risk. Now, I haven't done a lot of deals in Atlanta, Georgia. It is not my market, and so things could work a little bit differently there. So I'm going to just give you a little idea about what it would be like in my market, which is San Antonio, Texas. So one of the things, if we see square footage that is significantly smaller than what the county has listed on file, there's usually a reason the county doesn't know about it. And the number one reason that I run into often is that space was finished without any permits. And so because they didn't pull permits, there was no record of that space being done. I don't think that's what's happening here. And I dug into the county info a little bit, and I'll show you what I think is going on. So I don't think that that's what's going on here. I think the 2,300 square feet is actually accurate, but I just wanted to explain why that's an issue. So that's number one, right? Often, when there's a discrepancy and the county has a much smaller number, it might mean that there's an addition that wasn't permitted. Looking at this house, looking at the footprint of it and the age, I didn't think that's what happened here. Again, seeing some details I'll show you in a few minutes in the county records made me think that's not the problem here. The other issue is, and so one of the problems is, especially if the home's a lot older, that might have happened a long time ago, and you'd never really know it. You could do a home inspection, and it just, you might not find that sort of thing out any other way other than looking through that history. And so why would that be important? Well, one, if it's unpermitted work, it's tougher to know the quality of it. Of course, you get an inspection, but that doesn't tell you what's going on behind the walls. So that's one of the things. I think it's a rampant problem here in San Antonio, and so I, have a very, very strict rule here. That I only pay for square footage that the county knows about. And I think that's not me being overly cautious. There's a lot of people that's their stance here in town. Maybe in Atlanta they're a little bit more lax on it. I don't really know. Like I said, that could not be the issue. But so a couple other things that could cause a problem, but I don't believe is going to be the case here. In the event that you have a fire, oftentimes, depending on what your zoning looks like, you can only build back, you might only be able to build back what you already had. And so they might be like, no, 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 you didn't have that size property. Again, it's a big lot. I didn't spend a lot of time digging into the zoning. I don't believe, again, I don't think that's an issue here, but it's one of the reasons that I'm always looking at that. I want to dig into that discrepancy a little bit more. And then the other is, if it is not considered livable space, sometimes. Sorry about that. Just had my screen recorder fail. I was just saying that sometimes if you have space that's not technically livable space, and you have some sort of fire or casualty, it can open you up to additional liability from a lawsuit from a guest or a tenant. Again, I think these guys are very up on making sure they have the proper insurance in place. I know we're buying these within an entity. I'm buying a small piece of it. So for me, it's not the biggest worry for me to buy a piece of this. If I were going to buy this whole property, I'd really want to get down to know exactly what the issue is. But I do want to show you what I think it is. Okay, so pulled up the public records. Almost every county now in the U.S., like you can pull these up. You just have to search. Usually, I search the county name, tax assessor. There's usually a property search. Um, this is where I first saw the discrepancy. Well, I actually saw it on Zillow. They had a smaller number. So I pull it up here. Okay, so they think it's a 1,464 square foot home with a 3 bedroom, 1.5 bath. But then you can open up this property record card. And I did that. And so this is what I think is happening. If you look, they have listed a rec room, and it just has a number 840. It's not super clear what that number is, but I think this is a 840 square foot rec room. That's what is. And again, this is just me speculating, right? Like this is something. If I were going to invest a whole bunch of money in this, I'd want to find out that this is actually the case. But I think the downstairs part was probably one big open space, and they cut it up for this pad split model, or maybe somebody did it earlier. And that space, for whatever reason, was just considered a rec room, 840 square feet, and didn't get included into the total livable square feet for the home on the county level. Why that is, I don't know. Maybe it's because it's below grade if you look at the property from the front. Sometimes they'll do that. I'm not versed enough in this market to know that. But if you look at this, that would get you within 4 square feet, right? If you added that rec room space, it would get you within 4 square feet. So I think that there is at least some acknowledgement, if this is in fact square footage, which it's really hard to tell if that's actually what's happening there. But I think there's some acknowledgement that that is space in the home. It's just not included in the total livable square footage. It may be because it's on, like I said, it's not on that first floor from the front of the house. It's on the back of the house when you drive in. Let me see. Let me show you a picture. So maybe that doesn't make a lot of sense what I'm telling you. Um, So like from the back, I think it's this floor here underneath, like by the garage. But if you look at the front door, what did I do there? Yeah, you're walking into this on the grade above it, right? Like so it would be potentially below grade, even though it's not really. I think that that's what's going on here. And so in a lot of places, they won't count that the same way. But at the same time, a lot of in those markets, sometimes appraisers don't, right? And so I would be worried about it appraising, but we have an appraisal contingency. I don't think that. So I really don't believe that's going to be an issue. But I wanted to understand what was going on, and that alone made me feel quite a bit better when I saw that they had this. some acknowledgement that there's this 840 square feet of some sort of space. They don't know about all the bathrooms. They show it as a 1.5 bath. Um, but again, I mean, so in my market, I'd want to know like when was that other bathroom added? A lot of times, where this is a very old home, you're not going to actually find records of it, and so you just have to live with it, and just decide, do I want to take that risk or not? If this were a home that was built in 2010 and I had this same kind of discrepancy, some recent year, I'd be much more much more alarmed that there's we have all because it's a significant portion of the home, right, and it's creating a lot of the value. And so let's get into the value, right? They've got it under contract, I think, for $320,000. It says 310 here, but I thought I saw when I opened the contract that it was 320. Sometimes they will have, like, they've already, I think, are into the due diligence period and may have already what happened there? I already downloaded it. Purchase agreement. Yeah, 310 with a $10,000 contribution to the closing costs. So I'm not really sure what's going on there. Why it's maybe they're just netting that out, or maybe they've negotiated an additional discount. Sometimes they'll have done that because they already did the inspection, even though there's not an inspection loaded. So I'm not sure that that's the case. Um, but I, at this point, they've really earned my trust on a lot of this stuff, right? And so even though this is $10,000 different from that, honestly, to me, a deal like this, $10,000 is not making that big of a difference one way or the other. But it is, I think there's a couple ways that could be explained, and so I'm not sure what it is. But let's look at the where if that value is there, right? And that's why, um, so let's see. I was looking at this on a couple of different sites. So Zillow it has an extremely low or there's estimate. They do say it's 5 bedrooms, 3 baths. I know, as a pad split, it's cut up into 7 bedrooms. That doesn't adding those extra 2 bedrooms doesn't typically add any value to the home because you're not unless you add square footage, and I don't believe that they do. They just cut up some big open rooms. And actually, when you go to sell it, if you don't sell it as a rent by the room home, you have some extra expense to turn it back into a regular home. So I don't really care that the bedrooms are different. I don't think that's what's creating value. Um, and it looks like actually on here they have the right square footage. So I don't have any idea what Zillow's doing. Um, I spent some time looking through this. I can't figure out why. But when I looked at Realtor, they also, they say, oh, it's just worth 246,000, but they're using this small square footage. And so this made me want to dig in a little bit more, use homes.com, like I've showed you on a few different occasions. Oh, now it's not going to load for me. I'm going to have to reload this. I don't know what is going on with my internet tonight. I don't want to sit here too long. I'll jump back to that if that's going to be a problem. But so let me go do a couple other tabs. Checked the FEMA flood map. That looked fine. I went to spot crime. Quite a few crimes popped up, but you can see that it's zoomed out pretty far, right? And they also go back pretty far in time. Now, it is a little alarming to me that a number of these are gunshots, and I looked in and they seem to be actual gunshots. But when you zoom into the neighborhood itself, um, they didn't have any. Nothing showed up there. Now, obviously, um, when you go further back in time, you might find some. It doesn't mean, but this to me looked pretty clean. I was pretty happy with how this looked. Even though Atlanta in general, a lot of the places we've looked, there has been more crime than I'm used to seeing in a lot of markets. So that is a risk here, and it's one that you have to figure out. What do you think about that? But again, I mean, in the immediate neighborhood, it really didn't look very bad at all. Let me close that. I think if I close more tabs, hopefully, really don't want to have to go back and do the homes.com thing again, but we'll see. Okay. I checked it out on Padsplit because that's, looking at the revenue side. I found the property. This is it right here. What's interesting, it does show that there's one room left. It's not pinned in the right spot. Sometimes this happens. It should be down here, but it's up there. Um, one of the things that when I looked at the 162 per week, multiplied it by 7 bedrooms, multiplied it by 52 weeks to figure out like is the total revenue that they're talking about it, in line, and that looked good. So I'm just trying to, like I said, I mean, I've come to trust them quite a bit as far as they seem to be really good at picking out these properties. It's a property that's been operating as a pad split. They're using their projections for this first year are just what it made last year. So they're not like assuming any growth for the first year. And but I do want to like dig in and make sure um, that the numbers seem good from any of the third party verification that I do, and which is why I looked at Padsplit. It did remind me too that the other issue with the larger square footage is if we're looking at tax rates and the taxes that we're paying on this property, and that was actually one of the things they threw in as like added like, oh, well, it actually is a benefit to you if the county doesn't know about that square footage because it means your taxes are going to be lower. Um, but on the flip side of that, the risk is that you use those lower taxes in your estimates, and then the county finds out, and then you have this bigger bill. Well, they're actually already using a pretty hefty property tax bill relative to what the last year's taxes were that I looked up, and so I think that made me feel good about that as well. I don't know why this. I'm going to just have to start over with Homes.com, and that's not fun at all. Let's go through this. You can actually see what I was doing. We'll do the whole thing. Hopefully that doesn't freeze again. Let's see. Let's get. Just want to use this zip code. Just put that in there. Um, and so I'm using the filters, right? And so I want to say just sold homes. I think I just limited it to 2 bathrooms because when I did three, it wasn't really working very well. I did 3 bedrooms plus square footage, and this is where it's going to make the big change, right? Is because I'm going to use between 2,000 and 2,500 square feet, which is what I believe is accurate. I think it is 2,300 square feet. For the lot size, this is a little bit bigger than a quarter-acre lot, but I wanted to do a range here as well. Year built, I wanted to pick older properties, so I said 1990 or earlier. Um, at least 2 parking spaces, and that is one thing. This is set up really well for pad split parking. It's a corner lot. I love doing corner lots for these because you just have so much more street parking, and then they also have the parking here. It looks like I think they're probably even driving up here next to the driveway, but you have a couple of driveway spots, and you have a lot, all these street parking spots because it's a corner lot. I'm going to close that too, just to make sure my computer doesn't crash here. So, okay, 2+ parking spots. Um, there is garage parking as well. Uh, it's just only houses. Let's see, sold date, and I wanted to look just in the last 6 months. I mean, this market has been so crazy. Okay, so now I have a lot of filters, and it's only going to give me 3 homes. So I want to back out on something. What can I do here? Let's throw in some slightly newer ones. See if that changes. Okay, we added one there. And it doesn't, I'm going to say it doesn't have to have verbiage. All right, let's see what that does. Okay, then we get 10 homes. Um, and I'm in the zip code. Really, the home is down here, right? So we don't have any that are very close. But when we look at these, that have these physical criteria that are more similar to the property that we're looking at, um, they're all significant. There is a 235. So that's interesting. This is 300 square feet smaller. Um, but in general, like if you look at most of these, and there's a 265, but we have, and the average is well over 300. But if I were going to put a bunch of money into this, I'm definitely going to dig more and more into this. The other thing too is we know there's an appraisal contingency, and we're going to get an appraisal, right? So I'm not like trying to figure out, okay, I'm not doing a full CMA, like comparative market analysis, where if I were going to, buy the home myself or help a client with it here in town, I just want to make sure, does it seem reasonable what they're doing, right? Is 320 or 310 a number that makes any sense? And when I looked at the first Zillow number, it seemed like it didn't, right? Because that was showing like 150 or 200. But now, okay, we can see when I put criteria in that are more similar to the home that I believe we actually have, the 2,300 square foot home, more bathrooms than what it knew about. All of a sudden, we get prices that make a lot more sense. Now, I don't love that none of them are right in this part of town, but I had messed with the filters quite a bit, and I couldn't get anything. Like I couldn't get more comps over here. Um, without just adding like really. Let's see what happens. You gotta add. If we drop this down to 1,500, is when we start to, okay, now we've got some over here, right? You got a little smaller one. But I mean, this one I believe is actually just 1,500 square feet, right? I think that it doesn't have this extra large, rec room that was turned into additional bedrooms. It is on a similar size lot, but so I think we're getting almost 50% more, or actually more than 50% more home than this one. So even looking at those comps, it made me feel perfectly fine about the 320 or 310, whichever number we're actually getting it for. Again, I think it's possible that they renegotiated after the inspection. Speaking of inspections, there's not one in this file yet. Um, I think that was the case on the last one that came out. They're just selling these out quickly. But again, I think I mentioned this last time. What they're doing with the inspections is everything that that shows up as a red, like, has to be repaired. They've stated that they're getting that done, either having the seller take care of it or giving them a credit for it. And then they make judgment calls about everything else, and they do have. Let me just show you that. They do have a hefty. They have like $15,000 in a yeah, $15,500 in a maintenance reserve here. So it makes me feel perfectly fine about that. Like, again, if I were really worried about how they've been operating so far, these would be things that I'd want to dig into further. And maybe you want to, but maybe you don't have that same level of comfort that I do at this point with them. Um, and it's partially too because I'm buying little pieces of each one, and so I think that I am getting a diversified risk, and not if there is some due diligence item that I miss on one of them. um, I don't think no single investment on here is going to really hurt me that bad. But I do, I have really started to just see that they seem to really understand what they're doing, and because of the timeline for us to get these deals done, they're trying to raise the capital prior to closing. The timing of having everything up in there, it isn't always going to be perfect, right? And so, um, and it's really even not that at this point. At this point, they're just raising capital faster. I mean, if you look at this one, it's on this tab. It's already 26,750 raised. And I mean, I think they're only raising, how much are they actually raising? 158,000, right? This isn't even on their site officially yet. They sent out this link to some people early, and then they put it up on the webinar, right? And that's one reason to be on the webinar. You can get access to these properties a little bit early, get to spend a little bit more time doing due diligence. Of course, I could wait until tomorrow or the next day, see what additional documents they put up, ask them some more questions. Um, for me, this seems like a property. So, there weren't any glaring red flags. It's been operating for more than a year, with cash on cash numbers that are, to me, are fantastic. Um, in a market like Atlanta, where I really want to be, right? Like, it's a market that I like. And again, if you want to see more me talk more about that, it is in the some of the other videos in the Atlantic properties. Um, in what appears to be a solid property, uh, they, they are modeling a refinance to get you to this, annual IRR. I don't love that. I've mentioned that a few times. I don't really love that they do that, but I think it's a reasonable assumption that sometime in the next 5 years they're going to be able to do a refinance. What happens if you take it out? Okay, you get down into the 14s. I mean, that's again, it's not a bad return. This is, and one of the things I want to make sure, all of their returns that they state, this is the what you're expected, um, after all their fees, right? Like this isn't like property level and then, well, we get paid out less. And that's important because some of the sites are doing that, right? Some of the sites are showing you, what the property's doing, but it's not really showing you, um, but it's not, their top line numbers that they share with you are not really what you're going to net, because then, then they take some, some of them are showing an NOI basically on their when they're doing their analysis, but then when they're showing what your returns are, it's something less than that. And so I just wanted to make sure that's clear. And, they're refinanced. They're showing they're taking a little bit of cash out, and they're also, I think, lowering their interest rate. Yeah, and getting a lower rate. So sometime in the next 5 years, rates getting down to 5%. Maybe, I think it's possible they get down significantly lower, but it's possible they don't touch that 5%, right? And so, if I needed this property to hit 15% IRR, uh, I wouldn't want to count on that refinance, but I don't need to. Like this, the cash on cash return on a lot of their deals is the thing that I'm really attracted to. I mean, when you can get double digit cash on cash returns with what I think is relatively conservative leverage, right? Like they're not doing crazy leverage or 75% LTV. Um, it's I think their deals. I think a big part of it is because it's an interest only loan, which is why there's not a huge difference between their IRR and their cash on cash returns, right? Because you're getting, you're not getting any amortization. You're just, but I'm perfectly fine with that. Like if they're hitting, consistently hitting double digit cash on cash returns, I'll be happy to hold these properties forever, right? I mean, we're getting, depending on your situation, I will get tax benefits from holding these. I think a lot of people will if you have, other income. Um, and then again, they are predicting some growth, 3% growth, both in their rental income and appreciation. I think that that's reasonable. I don't love that they do this, just 1% for expenses. But at the same time, there's not a ton of expenses that I'd expect to continue to move up. So yeah, I mean, to me, looking at everything that I've looked at on this one, it appears that they have relatively, uh, you know, their underwriting is pretty conservative. Some of them I've thought they've gotten a little bit aggressive based on. I think they said that so they're using 50K for their yearly rent, and I want to say that they said that the actuals for last year were 56K. Let's see if I can find that, if that's right. They might have just said it, or I'm missing it. Um, I don't really love the two tab setup, right? And I get it. Like I think that it's probably, I kind of get why because this calculator tool is sort of built separately, so I kind of get why they're doing it. Hmm. Where is it? I wonder if that's just something they said in the webinar and isn't actually on here. I did like this, right? That their average tenancy is over 9 months, which is it's really good for a short term or for a midterm rental like this, where they're renting by the room. 100% occupied, actuals above year one underwriting. This is the thing. I really like when they do this, right? Like either what they're receiving is lower, but or what they're projecting is lower than what was actually received over the last year. Yeah, I guess maybe it's not on this page. or it is, and that's just, it is 5 in the morning and I didn't go to bed yet, so I probably am just missing it. I don't know. In any case, I think that that's, overall, I am going to buy a small piece of this one. Because, after the research I did looking into the square footage discrepancy, I feel comfortable with it. Again, if I were going to buy the whole thing, I'd probably dig a little bit deeper. Um, the 10K difference in this versus the contract price, I think they probably renegotiated. I don't think that they're just leaving off 10K, but the difference in your total returns are not going to be significant if that turns out that that's not 100% accurate. Um, yeah, I mean, I'm pretty good with this one. And like I said, I mean, you guys remember my rule number one is don't lose money, right? And they're buying properties that have a proven track record of doing what they're doing. And I didn't see any major red flags, in any of the due diligence that I did as far as on the area, the crime map, the flood map. I used the street view and looked around quite a bit. But again, just because I'm going to buy it doesn't mean that you should, right? You want to do your own due diligence. In any case, until next time, I'm just going to keep making mistakes so that you don't have to.